Welcome to TradeTheNBI.com. This is John. This report is for the 17th of August. Well, we're continuing a decent move with the steel rising here is giving us a little bit of a bonus push, given that we've been in this, what we would call it overbought when you get above that plus 15 as a warning line. And we've got just several series of days fading of the shakeout readings. And that's resulted in just kind of flat, modest move. We're currently experiencing a similar kind of situation. The ranges are still fairly decent, though they've been getting tighter as we've had narrowing of the focus of what can be done economically in that. And some of the numbers are good, but then some of the situations in individual states are not so great. You can see the NASDAQ has pretty much held the 100% line where the ES has been making some new highs, but the NASDAQ had made those highs earlier, so sort of a catch-up game. And been kind of neutral here for the NASDAQ as well. In fact, a little bit softer than we've seen from the ES with the fade. So we've also had a declining power bow. Can it start a new run-up? Absolutely. We're in the precipice, but at this particular point, wouldn't be looking for anything hyper dramatic at this particular stage, given the softness of that. What's important to see, though, is the short increase. That's always a good thing. Separation, of course, of orange to the steel certainly usually leads to nice uptick moves. So when you have rising red DOC, and you can look at the same, this works kind of similar to what the power mount. You can see that when you get the separation between the orange and the steel, where you then have a negative move, it exacerbates it just a little bit. Euro maintaining its highs. Again, it's an interesting one because, again, the Euro zone still not outperforming America in any way, shape, or form, but certainly they're giving it a valuation that was like sort of back in previous year. It's kind of interesting, simply manufactured, because there's no real justification for it, no other way to describe it. And of course, the same situation when you see this kind of a flat line in oil. And it's not because there aren't a variety of things happening in oil, it's just that this is sort of a minimum threshold for sustainability. I wouldn't even call it long-term stability, just holding on to, keeping certain industries alive. Otherwise, they would be completely decimated because given the demand structure right now, they kind of should be. And from a gold standpoint, filled back the gap that was over here and some of the positive extremes. I think it's just going to be in a holding pattern until they get some clarity as to whether things are improving generically with the economies or if there's a resurgence that's going to push things backward. So it was a much smaller day on Friday, and you can see mostly it was weak. We had our sell signals, we dipped down. We ended up with our power mode 2 crosses in those setups. We've done pretty well with the adjustments on creating those, about ready to convert them into the PNT2 here, which will be nice because it will correspond to these kind of dips where we then have the rising power mount, and we'll follow that a little bit closer, which will be helpful for everyone. Right now we're at the peaks. Don't really have much trauma here because we've got the dip below the red line. Those have already been met. The positive extremes that took place got filled very quickly before the end of the day, and the new ones are just some yellow warnings that are taking place, which is kind of why you're getting some erratic bars. But overall, things look pretty good. Can't complain about it at this particular stage. I think we'll probably see some pretty decent range, though, within the overall setup. And that's been pretty consistent with what we've been seeing recently, anywhere from 20 plus point swings in a day. It's pretty given. As always, though, I'll put up anything relevant on the Skype chat. Trade well. Talk to you later.